I told people here, and kind of devastatingly on the Today Show, to get out at Dow Jones 14,000, Dow Jones 13,000, even Dow Jones 11,000. The market just kept plunging. These were the best calls of my life. Then I recommended getting back in at Dow 7,000, very close to the bottom, literally 50% below my first big sell call, and it was big. Let's see, out near top, in near bottom. Yet, do you know there are still tons of people who are angry at me because I scared them away from stocks in 2008? Of course, not all of them heard me tell you to get back into the bottom. They had years to reposition. But I was despised by a lot of people for my best call to sell. So I've always had to think about that. What makes it so difficult to get out and then get back in? Well, let's start by thinking about the proximate cause of the decline, which is inflation. Today, Target reported a huge miss. It's terrible because of inflation, and the stock was down gigantically. Yesterday, Walmart experienced a similar debacle. These are iconic large companies, and they're very well run, household names, and it really does scare people when their stocks collapse like this. Because they're so important to so many ETFs, the pin action is horrible. They can knock down entire sectors, which is exactly what they did, entire market. Of course, if inflation is the culprit, then if the Fed can wipe out inflation, these stocks should do much better. Which brings me to the task of Jay Powell, our Fed chief, and it's a big one. See, remember, he's declared war on inflation. He's gotten very serious about it. He's not going to stop fighting until it's killed. He has no choice because inflation is everywhere, people. It's in every aisle of every store, every car lot, every factory, every home, every country. Right now, Powell's losing on too many fronts, which means he has to get more aggressive about raising interest rates to cool things down. That's why I didn't want him to tie one hand behind his back with that silly talk about 50 basis points. I'd rather get these rate hikes over with quickly, meaning 75 basis points, 100 basis point increments, several of them, because inflation is so pervasive. And if he would crush it quickly, we can go back and start investing more easily. Powell does have a daunting task, though. First, he does have some wins. It's not all losses. The incredible declines in the stock market are a victory for the Fed because all of this wealth destruction means a lot of people will be more hesitant to spend money. The losses are everywhere except for a handful of sectors. I think almost any company could be vulnerable to a shortfall. I'm very worried, for instance, about stocks we've owned for ages for the charitable trust, like Apple because of the Chinese lockdowns, Amazon because of how poorly the retail business is doing. Hey, Cisco got clubbed tonight because it couldn't get the parts it needed out of China. Too much lockdown. Would have been a very good quarter, I think. I'm going to ask CEO Chuck Robbins about that tomorrow on Squawk on the Street. But nobody cares right now about what he has to say. They just think that that company is awful. They're panicking. I have a bulletin for that we've been working on all evening for club members, special bulletin about this time. Please check your inbox, okay? That is for CNBC Investing Club people only. Now, remember, consumers saving money will help break inflation, while more spending just accelerates it. The hideous market would make anyone more cautious about spending. If you're Jay Powell, that's good. We know the consumer's been spending way too much. Less consumer spending makes Jay Powell's job a lot easier.